go.
Streaming from South Africa to the world. This is the Stonks Go Moon podcast. What just happened? We break it down so you don't have to.
Welcome everyone to the Stonks Go Moon podcast. My guest today is Izak Odendaal. He is investment strategist at Old Mutual Multi-Managers. What a tongue twister. Izak, welcome to the pod.
Thanks, Rocco. Great to be here.
Looks like lovely weather in Cape Town as it always is. But let's go abroad first and talk US macro and how it relates to emerging markets. And I want to unpack your it's not you're not on a like a subscription service or anything, but it's called Market Matters. It's a report that I read every week. This one is titled Dollars and Cents, which is very clever because it's a play on cents, isn't it?
Yeah.
Yeah. And it's all about King Dollar. And I suppose that's the biggest message was that, oh, the dollar is dead or the dollar is dying. And hey, yet here we are. So do you want to take us away?
Yeah, I mean, so two things. The one is that we've had in the last couple of weeks sort of a resurgence in this idea that the dollar is under threat, because obviously now with the sanctions against Russia and Russia's trying to move away from the dollar, because as soon as it does any kind of transaction in dollars, it is liable to be sanctioned by US. So any bank anywhere in the world that does business in dollars anywhere in the world cannot do business with Russia.
Yes.
And therefore, if you can bypass the dollar, that obviously gives Russia some leeway. And then to a lot of people kind of extrapolate and say, this is the beginning of the end for the dollar. The same thing that they've been doing for the last 50 years.
Yeah.
At the same time, as this debate is now kind of resurged, you've got the actual value of the dollar in foreign exchange markets rocketing higher. So if you look at where dollar yen is, if you look at where dollar euro is, and more recently the rand as well. So the dollar has actually been strengthening a lot. So you've got these two kind of let's call it contradictory things happening at the same time. And I think the one is obviously much more important from a longer term perspective, and the other one is relevant in the shorter term. So if we just take the first one, which is the role of the dollar in the global system. Now, I mean, there are a lot of people who are smarter than me who've written extensively about this, but my sense is very simply that, there are two reasons why the dollar is not going to go away anytime soon. Yes, people will try and move, diversify away from the dollar. Yes, China, Russia, the likes will diversify away from the dollar. We've already seen that in central bank reserve assets. There's a trend towards diversification. But the dollar benefits from, number one, the strength of the US, the economic strength, the military strength, the financial market strength of the US, and the rule of law and the trust that people place in the American system. And, there's been an argument that, the Federal Reserve has been throwing away that trust to all its money printing and so on. But yet the demand for the dollar is still there. And in fact, if anything, people trust the dollar more because they know the Fed is there to backstop US financial markets. So you're not going to wake up one morning and the financial market has seized because the Fed is there with all the ammo. But the other reason the dollar is so dominant, and it really is dominant across commodity markets, equity markets, bond markets,
you name it,
commercial activity, trade, and the like. There's just a huge network effect.
Yes.
So, you use a dollar and I use a dollar, and it's useful for me because you're using it, and it's useful for you because I'm using it. So in that sense, it's very similar to a social network like Facebook and LinkedIn and so on. It's not that the one is better than the other. It's just because all your friends are there, and all the famous people that you like are on that network. And I think it's very difficult to displace that network effect. Because you kind of need everybody else to move onto that network to lose, to regain the benefit of the convenience and the cost saving of being able to transact in a similar currency.
The one country that always gets mentioned, is China, and the digital one that they're doing now. What's your sense about that?
Yeah, I think, as I said, I think the Chinese will also try and kind of move away from this dollar system. But at the same time, for obvious reasons. I mean, again, they don't want to be vulnerable to US sanctions, same as Russia. But at the same time, China's also been...
They saw what happened, right? Because, I mean...
They saw what happened. I think they were as surprised as the Russians were.
Yeah.
By how swiftly... to use the pun on the term swift, I mean, how this whole thing escalated. But China is also taking steps to integrate itself into the global economy. I mean, China does a lot of borrowing in dollars. Chinese companies do a lot of borrowing in dollars. China has actually taken steps to facilitate the creation of a dollar bond market, offshore dollar bond market, and so on. So, again, I think in the very long term, we are probably moving towards a world where there are possibly different currency groupings. Maybe the more we trade with China, the more kind of Chinese, countries in that sphere, start using the one more. The big obstacle, of course, is that yuan is not fully convertible. So if I sit with a bunch of current yuan currency in my hand, I can't necessarily do much with it at the moment. Whereas I can take my dollars anywhere in the world and spend it. So until such time as China actually really takes steps to open its capital account so that money can move in and out freely, people can buy and sell bonds, move in and out freely. I think that's going to be a headwind to global adoption of the one. And of course, the challenges are also around rule of law. As I said in the note, I think the easiest way to gauge whether there's rule of law in a country is, can you sue the government in its own court? And you can do that in the US and expect to get a fair trial. I'm not sure you can do that in China and expect to get a fair trial. And so investors might feel it's not really worth fully adopting the one. There are still risks.
Because I mean, there's reports now this morning that Jack Ma has been arrested again. So I mean, everything that the CCP is saying doesn't sound like we're going that open route. It's, if anything, it's becoming more closed off. So I guess that your point there makes sense. Let's translate that into the South African macro environment, because I mean, that's where we are. South Africa is still one of the biggest emerging countries, economies in the world. What do you think sort of the effect is of this strong dollar that we're seeing on the South African economy?
So the good news is we haven't actually felt the strong dollar that much until quite recently. So the rand was actually stronger until mid-April on a year-to-date basis, and then obviously it really fell out of bed in the last 2 weeks or so. So far we kind of flat for the year-to-date, which I think is still a pretty remarkable outcome given the global turmoil. Normally, when there is a global crisis, you would expect the rand to weaken substantially because it's such a highly traded currency. Global investors often use it to express their views. So if they anti-emerging markets, the rand is the first thing they sell. Obviously, the commodity story has really benefited us this year. But to answer your question, I think the key thing from a South African point of view, we obviously benefit from a weaker rand in terms of exports, but then imports become more expensive. So it impacts inflation domestically, and it impacts particularly how the Reserve Bank sees inflation. And therefore, if we were to see sustained rand weakness, I think it does shift the dial on how the Reserve Bank actually responds and raises interest rates. So to put it in simple terms, were the dollar to strengthen further, I would expect the central bank to to keep hiking interest rates and to be more aggressive in interest rate increases.
Yes. Let's say you're an investor and sitting and listening in America or in Europe. What would you say are a couple of the good, if I can call it good or bad points in terms of our macro environment if someone is looking to invest in South Africa?
Yeah, I think at the moment there are probably more good than bad things. I mean, we've come through a very tough period in this country, as we all know.
Yes.
But I think the picture is changing. I think the narrative is slowly changing globally. Number one is you've now seen how an emerging market with really bad governance can blow up, and the benefit of having a democracy and kind of not being Putin.
Yeah.
So that counts in our favor. And number two, obviously, we benefit from the commodity story, and I think there's a general sense that we're experiencing a lot of volatility at the moment, but longer term, given the green transition and so on, there's sort of a structural story for commodities in the next couple of years, and I think that stands us in good stead. And of course, the big thing is just the reforms that are taking place locally. So, and I think for most South Africans, those are not happening fast enough.
Yes.
And there's always a case of 2 steps forward, 1 step back. But if you take a kind of stand back a little bit and you say the progress we've made, for instance, just in terms of electricity,
yes,
the unbundling of Eskom and the fact that companies can now produce their own electricity, talk at the moment of sort of introducing private players into the rail and the port network. I mean, those are big changes in our economy. We've had the spectrum auctions. Those are big changes that are slowly working their way through. The fiscal story, which was really, really dire not so long ago, the debt to GDP projections were kind of going towards 100%, and now they're expected to peak at around 75%. So that's also a big improvement relative to where we were. So I think all those things, coupled with very attractive valuations still,
that's good
I
to
think,
hear.
I think that South Africa should still be on the radar screen.
That's very good. I mean, always good to have more positives than negatives. That goes without saying. But I mean, and sorry, before I let you go, like imagine for a moment, you are a South African investor and you have significant offshore exposure. Let's say the US tech stocks down 25% from all-time highs. What do you tell those people? Because usually what we read on Twitter and then on LinkedIn, I include myself, is that we always publish our opinions and we say #not financial advice, do your own research. You are actually in a position to give financial advice. Not asking you to do that now, but I'm just maybe if you can quell some fears that are there at the moment.
Yeah, I mean, it's a very volatile environment, and obviously we are, we've got a sort of confluence of different risks from an investment perspective.
Yes,
you've got the war, you've got the Chinese lockdowns, and I think the big one is still the Fed and the rising interest rates.
Yes,
and I think those higher interest rates have really sucked the wind out of, and I'm mixing my metaphors horribly. But those tech stocks have taken a huge beating, and I think it just shows the extent to which they depended on low interest rates for those lofty valuations.
Yes.
Having said that, there has now been a substantial adjustment in valuations. So I think if you were holding those shares, it's probably too late to sell now. I think it's more a case of now assessing what future prospects look like. I think related to that question is now, do you want to buy into global markets? Especially given regulatory changes that we've had in South Africa. That means that local retirement funds can increase offshore exposure. So I think the long story short is we're not in a huge hurry to increase our offshore exposure.
Okay.
Despite the declines we've seen, I think number one, because there is still quite good value in South Africa, as I explained earlier.
Yes.
And number two, I think the risks are still substantial. If you think about the inflation outlook and you think about what the Fed actually has to do now to get inflation back to 2%,
yes,
it needs to possibly hike interest rates quite dramatically. And although I think a lot of that has been priced in already, I think there's a chance that they might even exceed what is already discounted. So I think those are the reasons to be cautious from a global equity point of view.
What is that old saying? Don't try and catch falling knives. I think that rings very true now. Izak, thank you so much for joining me today. If the listeners want to connect with you, where is the best place to do that?
Yeah, thanks. I think if you can find me on LinkedIn, that's where I publish a lot of my official work and some of my unofficial work as well. So that's probably the best place to look at.
Link up with him on LinkedIn. I want to ask you about your drawing on charts, right? The animals on charts. Where does that come from? And any chance that's going to be an NFT soon?
So it's funny. I mean, one day I just looked at a chart, and I'm actually quite new to LinkedIn or social media. I've only been doing it for the last 2 years. And I pull up a chart, and it just really looked like the jaws of a monster, because the one chart was going up and the one was going down. I think it was a chart of asset class returns. And I just sort of, for the fun, just kind of drew eyes and a mouth, and it looked like a monster. And I got a very, very positive response. People loved it. And I just kept doing it. And then over time, I just decided to not just draw a monster, because after a while it becomes obvious. As soon as two charts diverge, it's a mouth. So it becomes obvious. So I just started looking for sort of non-obvious ways to incorporate, funny things into the charts. So I
with a lovely backstory. If there's any publishers, and a bit of a backstory, if there's any publishers out there, you need to connect with him ASAP. That needs to be in paperback, or for the digital savvy people, it needs to be an NFT series. Izak, once again, thank you for joining me. To our listeners, peace, love, and prosperity, and we'll catch you on the next one. Cheers.